Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, December 19th, 2013. We had a kind of a lackadaisical session going until we got the results from the Fed decision. The Fed decision was very, very well received by the market, and we closed at the high of the day and did some very, very good things internally. Closed with plus 1,787 issues on New York, which is the highest number that I can recall this year. The Nasdaq side closed plus 1,100 issues, which certainly was a very good showing as well. So what we have here is we have a very, very broad-based, strong day, very impulsive day to the upside. This is the Wednesday before options expiration, so we could have seen and had enough volume today to do a little of the unraveling of the options, but we very well could see some more of that tomorrow. So let's dig into the technicals and see what they have to tell us. All right, now here's a look at the ES futures. You can see obviously the big candle to the upside here. We actually did interact with the 50 period moving average, which was of course support here initially. Closed back up above the 10 EMA and actually got up to close to the high close of the move. So what this does is just essentially does a lot to kind of take off the table a roll down here from the 13 into the end of the year. When this started printing on the charts, we were talking in the trading lab that we do have a 13 exhaustion in place here, but chances are it's not going to break this year. It's probably going to be just kind of a stopping mechanism to hold things in check for the end of the year. And certainly after today's candle, that seems to make a little bit more sense. So to the upside, the 6/8 level is going to be important resistance, 1812.50. Then if we break above that and start to get a little giddy to the upside here, then the risk level at 1828 or so is going to come into play. And just make sure you write that down. That's an important level that not a lot of people are going to have handy. So that's going to be something that you can use to your advantage. To the downside, obviously, to the low of the day today is going to be important, and of course the 50 DMA. If we get back down and use that later this week, which is not really looking that plausible. As far as the NQs go, similar setup, not a new high on the move, just like the other side. The only difference here is the risk level is a lot tighter. Risk level has already been used, so if we do break above this risk level, this relative strength of the Nasdaq could break this thing loose, and we could see a squeeze into the end of the year. But that remains to be seen. We'll see what happens as far as that goes. The volume today, as far as the futures goes, was okay, but wasn't anything spectacular. All things considered, we actually had more volume the previous day. So, upside, I still even though I want to respect this move to the upside here, this market's tired, is fatigued. We do have exhaustion signals in place on both sides, so in time and price, the market needs a rest. So even though we had this pivot to the upside, I don't really see this going anywhere right now. So we'll have to see how this all shakes out, but I'm just going to be a two-way trader. Certainly for the rest of the week and probably for the rest of the year. All right, let's take a look at the market internals. Internally, we saw some, a new positive development here in the Dow Gold ratio. Made a new high in the move and a new high of, since 2008. So still putting risk on here. Definitely, favoring stocks over gold. New high in this chart, and we broke out of this little consolidation range to the upside. So that's definitely a coup for the bulls here. All right, internally, the one thing that wasn't so great was the NDX was very, very weak versus the broad market. There's a lot of strength, especially in the banking index and whatnot. We'll drill down to the individual sectors a little bit later. But on balance, the broad market was much stronger than the NDX. So we're really starting to see some lagging in the NDX. Maybe it's time for the broad market to catch up a little bit. But if we break out in the broad market and we don't break out in the NDX, I think the breakout in the broad market is going to wind up being short-lived and probably wind up just using that magenta risk level that we looked at before. So until we see the NDX get on board here, I think a breakout in the broad market to new highs is going to be pretty suspect, and it's probably going to attract sellers pretty quickly. Here's a look at the 10-day trend. We're pretty much dead neutral, so we could make a pretty decent move in either direction before we get either overbought or oversold. So, as far as the gas gauge goes for the overall market, there's plenty to do in either direction before we get any kind of an oversold or overbought condition. Even today's abrupt surge to the upside didn't move the needle very far here on the 10-day trend. Here's a look at the cumulative advanced decline. We're still using this area of support here for the Nasdaq, which is good. So we didn't qualify with a lower high here. We've got this high watermark. We kind of just retraced back down here, but we don't have a lower high condition. So both lines are still positive, even though the S&P side, with the market trying to push higher since October, really hasn't made much movement and much progress to the upside here. I'll just zoom in on this. This is the overall action from about October to now. Market's been trying to push higher, but we don't have really that broad market participation here. So, I'll call it positive for now, but this is definitely a little bit of a concern and something I've got my eye on. Here's a look at the S&P TLT cross. Made a new high on the move, so you can see evidence here of risk being put on. But considering the overall magnitude of the move in the market, this wasn't all that impressive. If we do get back up to this trend line, this regression channel here, this trend line, we're gonna find some resistance. So we've got a little more room to go before we hit that level and start to get a little bit extended to the upside. All right, so as far as the multi-sector daily chart goes, we're kind of finishing up the year the way it's been all year. We have positive price action and everything except for the XAU, the SOX, the BTK, and the BKX are all fairly positive to different degrees today, and the unloved cousin, the XAU, just remains a source of funds. Didn't make a new low on the move, but they're just still kind of averting it. So we'll have to leave it at that, and it's just kind of sad. We'll have to move on to the individual sectors and maybe hope for a little better price action out of the XAU next year. All right, so here's a look at the individual sectors ranked from best to worst. Top gun today, certainly the housing sector. There was some corporate news today on the individual companies that definitely affected that, but certainly a pretty good surge there. The BTK and the Nasdaq side, really good showing, 2.5% to the upside, real strong. The pharmaceutical index wasn't too far behind, up a little less than 2%. The XAU was really the only lagger on the day, as you could expect. Source of funds. We had a nice short in the room on the GLD shares. Went to the playbook and did something that we don't usually do. We actually did a bracket trade. Gold was just kind of sitting in this range, and we bracketed the kind of the band of trading after the initial FOMC decision came out and said, listen, if it breaks either up or down out of this bracket, we should get a pretty good move. And we got a substantial move to the downside. Had a real nice late trade trading the GLD ETF short to take advantage of that. The only thing I didn't really like about the price action today was how far down the oil services were. Would have liked a little better participation out of that, but actually, let's start with that chart right now. Here's a look at the chart. We didn't even top the 3-day high in the OSX, so not impressive to me. If the economy is ready to pick up momentum and to pick up some kind of upside steam as evidenced by the Fed, I want to see this thing moving. Not happening. So this high is going to be really important from midweek here. So if we break over about 276, we should see a pretty good move to the upside here up to this 4/8 level. But for now, this move was fairly unimpressive. Next thing, obviously, to take a look at is the transport index. Transports did respond positively. High of the day close, pretty decent amount of range covered, especially with FedEx opening lower, closing the gap, and then moving higher. So decent action out of the transports, but the transports are kind of just the same condition as the rest of the market. We've got a 13 in place, just kind of slugging sideways here. Can't really get higher than that because we do have that exhaustion in place, and it's going to take some time to break out of this. This chart actually printed the 13 well before the broad market, either by the ES or the SPX or the NQ futures or the actual NASDAQ index itself. Those prints are much fresher on the chart, and unfortunately, I think that's kind of what we're looking at for the rest of the year. Is where we've got our 13 exhaustion in place. All it's really doing is arresting the move to the upside, a little up, a little down, but really just kicking in a consolidation phase here where we can't really move higher because of the signal in place. And I think that's kind of what's happening right now with the overall market on both the Nasdaq side and the broad market side. BTK index definitely the top gun on the day. Technical feature here: we closed above the 4-ace level, which is nice. Need to follow through to really kind of qualify that. But the thing is, we closed right at the breakout level here. This is the previous high here that we made in September, and that was the breakout level for this little exhaustion run to the upside. So this is actually kind of a key resistance area. So I wouldn't be surprised to see it more of a measuring day tomorrow in the BTK. So just be a little cautious taking along. So I don't think this is necessarily something that's ready to run tomorrow. Might need a measuring day and then perhaps break back to the upside. We've got an incomplete exhaustion run to the upside here. We only got the 6 bars up. So maybe after a little bit of a measuring day and then maybe a resumption of the trend to the upside, then maybe we could talk about getting up into getting to new highs and potentially getting that exhaustion run a little further along here. But for now, we're right at key resistance. All right, folks, running a little bit long tonight. That's going to be it for tonight. Good luck tomorrow. Just remember, tomorrow we still could have some unwinding left over from the options guys. So be prepared for any trend that starts after about 10:30 or so. So 60 minutes into trading, and thereafter, if we do develop a bias, make sure you go with that bias, because that could be the unraveling bias and something that'll be fueled by the options desk. You want to embrace that trend. All right, until next time, this has been Rich for Tradesight, and thanks for listening.